Hello, this is Coach Mike from WinningStockCoach.com. I'm going to get started on my weekly market overview video. We're going to stay focused like we have been over the past month or so, specifically on the SPX, just so in the video, because I don't want to confuse anybody, and pretty much all the indices are trading very similar right now. If you look at this weekly chart that I'm sharing on the SPX, this first one that I have up is marking and annotating the swing points. I'm going to zoom in just a tad here, and you'll actually see that since those big drops we had a few weeks ago, we've kind of found a little bit of a consolidation range. At this point, that is giving us a support level here at 1886.76 and a resistance level right up here at 1994.99. And as you can see, we've kind of actually had like 3 straight weeks where the highs got right into that 1990s area and failed to break it. So, right now, I think we're very well set to trade this as a consolidation range break. What I mean by that is basically if you cross the 2000 level of SPX and really the 1995 area, where you'd be looking at is to trade that, and I still think it would be a short-term trade, as to where that 1995 would then become your support, and your target area would be about 2053. So, really, if you get that range break, and as you can see, we're kind of hovering midway in the current consolidation range, but if we were to get that 1995 break, another 55-point move is what we would look to target on a short-term trade for the SPX, just judging by what our swing points are telling us here. Going over here to those trend lines that I had discussed a few weeks back, this top trend line, I actually discussed it and labeled that my QE3 trend line. These two purple ones were that QE2 area. You see that we actually dipped down through into the one we're trading in between them right now. And then down here was that first level of quantitative easing, and also a trend line off the market bottom back in 2009. As we look here right now, my expectation is actually that we're just going to keep trading between these two. But the important point to make is that if you use this bottom one as your support, it is moving up. So each week that goes by, your stop out / support would be getting higher, as well as your target / resistance point. So as of right now, as long as it's trading between these two lines, I'm not expecting, big, huge moves. Like I discussed the past several weeks, even when we got that fall right as we expected time-wise, and right to the target point we expected, we were still expecting a little bit of consolidation period again, just like we had back here. And that's where I'm going to go back over to this chart here. You guys should all remember this, where I talked about the Fibonacci retracements on the SPX back in the 01 crash, the 08 crash. And we actually had a setup here from the market correction in 2011. But what I want to do is come up here, now that we have a good basis low point from the week prior to this past one, we're going to really be looking at that 50% line being at that 2025 level. And, as I've talked a lot about, is being patient right now, focusing on shorter term trades as we allow ourselves to basically just wait and see if this happens. Now, you can wait and see in a couple different ways. You can literally just sit on cash and wait, or you can focus on some shorter term trades using your shorter term time frames of charts. Here lately, I've been liking my 60-minute charts. Trading options out 1 to 2 weeks has been pretty good, and it's helping pass the time while we wait on the very easy to follow signal that we are waiting on. If I switch this over to a daily chart, and I'm going to go over here first to discuss those Fibonacci points. We did come just shy of that 1838 level we were looking for with the Fibonacci points, but again, on our swing points, we were looking for it to hold on a weekly close this low here, which it did. It fell but down and sprung up really big. But going back over to our Fibonacci chart, we're again trading between two levels. Now, there's a couple ways you could look at that. It's, that aspect of, well, so what do we do with it? Or there is the trade to both targets because on most of your charts right now, you're going to find that the profit on the call side of a trade or the profit on the put side of the trade would exceed the maximum loss on the opposite side, and that would be done doing what's called a strangle trade. And so that could still be a good entry coming into this upcoming week. What I'm looking at in particular is actually on the 60-minute chart that I've brought over here. You know, for that total fall that we saw on the S&P on the 60-minute chart, you can see this 50% line is annotating that dead cat bounce, and really we've pretty much essentially double topped on it. We had that wick last week, but besides that, you know, we had a little bit of consolidation, another fall. And this blue box that I've outlined is actually an entire zone in which I'm focusing more on those strangle and straddle type trades. Now, if I look at this pattern overall, we kind of finished right at what could be a little W breakout and get us another run up to the higher end of this. But essentially, what I look at is following this chart as an indicator. And so long as the SPX remains in this blue shaded box, I look at the stocks that I trade regularly, your Apples, Facebooks, many others, and when they reach support or resistance points, I've been taking those strangle or straddle type trades, and it's actually been quite lucrative to approach it in that way during this time. Overall here, though, I wouldn't be surprised to get a little bit of upside again early in the week. But the important thing to realize is that at the end of the week, after our start of this past week gave us the big up run, what we actually did was fail at this point here to rise above half of the level lost from our high to low here. So we're still kind of in even that dead cat bounce range there, but at the same time, this little double bottom that we got on Friday and led us up to here could give us another run to this top point anywhere between this 1975 and 1985, 1987 area. And that'll be the area that I'm looking for early. And again, this is just for short-term trades. Where I really believe the things will be happening as far as those extreme profits that we saw on that last big dip over this couple week period here is going to end up being still quite a few weeks away. I'm going to go back to this chart and I'm going to zoom out, and I want to show you just once again, I talked about this a few weeks ago, but I want to reiterate it because to hear it a few weeks ago and then remember it every single day when you're watching the markets trading live and you see the red candles and green candles and the emotions take over, it gets a little bit difficult for people. But, you know, in our chat room, we had people, and I do not blame them at all, but a couple weeks back when we had that hard fall, remember, I hope everybody remembers, we woke up on a Monday morning and man, the Dow was down 1,000 points and people were freaking out. And what I had instructed our members at the coaches roster to do, we were actually heavy in puts positions at the time, was to sell all our puts early in the morning. So we actually sold our puts, sold our short positions on the drop because that anticipated drop we had from our swing points, we hit right on it. And we didn't really play the bounce because I didn't know it was going to be that aggressive of a bounce. I'll admit that. No clue it was going to be that aggressive. But that point where we can expect those huge profits that we had a few weeks back again is still going to actually probably be several weeks away. You know, when we had those big drops, we had people in our chat room, again, I don't blame them at all. They were all super excited and anticipating, we're going to crash. What do I buy for a crash? Oh my gosh, it's going to crash. That's not really how stocks work, and it's not how our markets work. We're going to go back, clear back to 2001, and look at the setup from the tech bubble crash. And remember, we did this a few weeks ago, but after the larger drops, we actually had a several week period where it made up some of the gain or some of the losses before falling again. If we scroll forward here to the 2008 drop, this would be the period that's very, very similar, almost identical to where we're at, and you're looking at an 18-week period from the first big drops until the period where it really got dropping again, which would leave us pretty much in this zone here, to where, as I've told people, to still expect that they're going to try to fake you out. They're going to try to make one more lower low on it, but it won't be a big time lower low, and it could just be a little head fake action on us. And that we've really truly got to focus on this period, that it's not just going to go straight into market crash mode. As a matter of fact, I've been telling members of the coaches roster that we're actually waiting for the second high on our weekly chart, the second high to be made. And it really is because of the similarities from back here, where you see you had this bounce. It pulled back off that, and the second high left us at that dead cat bounce range and truly set up the market crash, even though all the TV experts would tell you that we didn't see this coming. And in October, late September, early October 2008, we had this big crash that nobody could predict. The chart showed us it was going to happen. And the reason we're waiting on that second high specifically is right back here in 2011. 2011, we had a very similar consolidation period, the large drop. And again, it was actually the second high that told us it would not crash. And what I mean by that is that second high exceeded the 50% retracement. You know, the 50% rule for technical traders basically tells us that any stock that does not retrace more than 50% of its move is still showing strength in that move's direction. To put that into layman's terms, if this bounce here would not have gone above this yellow line that annotates 50% of the move before falling again, we actually would have expected a lower low. Because it exceeded the 50% line did not mean it was going to go straight up from that point, but that the following low would be a low that showed weakness in the down direction. How would you show weakness in the downwards direction? Well, by making a higher low. So right now, at least for those great big trades that you can make off market crashes and such, and just a little disclaimer, I am in no way saying that the market's definitely crashing, because I know what I'm looking for before I'll make that statement. But if you look at those similarities, the correlations in the charts, we've still got a ways to go. We've got time that has to pass, and during that time, as I've said the past several weeks, we would revisit the highs and lows from the big drop week several times. And on this 60-minute chart, you see that from that first week where we made the run up after the lows, that we've revisited the high and low points several times, just as we've talked about. And with all of that stuff still correlating with each other, we have to stick to what has shown us to be accurate. We have to wait for the time for this to make that second high on the weekly chart. We have to wait through the consolidation period that it is going to give us and has already started to show us. And while in this consolidation period, we have to focus on a short-term mindset for trading, not necessarily day trading only, but a short-term mindset in swing trades if you're using options with 1 to 2 week max mentality for. Awaiting simply for the signal that will tell us if we're going to crash or not. And until that time, remaining neutral in our mindset, not allowing ourselves to be convinced that it will crash or will make new highs, but to stay just short term and trade what we see. This is Coach Mike from WinningStockCoach.com, wishing you the best of luck in the upcoming weeks with your trades, and God bless.